we have a surprisingly intense video for all Tesla stock investors. Now, this could be interpreted as good or bad. We have the Fed, which is making a U-turn on some of their hawkish speak that we have heard recently. It looks like the Fed has lost all control of the long end of the yield curve. We have everything you need to know on that one. That one has big implications for stocks and for our markets. We do have a lot of news for Tesla stock and potentially the Cybertruck delivery event announcement that a lot of people are speculating could be coming out tomorrow. I did make a small trade on this. If you guys want access to all of my trades, link down below in the description of this video. But this statistic might shock you. We're going to start off with it, but first, if you guys want to stay up to date with everything going on in our markets and with Tesla stock each and every single day to hopefully help you make more money, become a wiser investor, and reach your financial freedom goals as soon as possible, hit that subscribe button and start the video off by liking the video so let everyone else know that you are a Tesla stock investor. And if any of those previous things we just mentioned applies to you, also hit the like button. So it should be like thousands of individuals hitting that like button. Check out this statistic. This is a chart of the percentage of stocks above their 50-day moving average, and you are sitting at some of the lowest levels that you have seen in by far the last 6 months. This is a 6-month chart. You're down here at about 16.5% of stocks. Over the past year, you are at the lowest point that you have been at since back here in October of 2022, when you were at about 14.5%. So not a lot of stocks are doing well right now, but believe it or not, Tesla is in the minority of stocks that are above their 50-day moving average. Tesla, a matter of fact, is about 4% higher than its 50-day moving average. If you were to single out stocks that are 4% or higher above their 50-day moving average, you're going to come to less than 1% of stocks. So Tesla is in the super minority of bullish stocks right now. This recent bullishness has led a lot of people to question whether the Cybertruck delivery event is about to be announced. Specifically, yesterday I reported on this. Tesla stock was up 6%, and Elon Musk said on Twitter, quote, "Follow the money, ... I know you have to have some kind of tinfoil hat on there, but the money surely went into Tesla stock yesterday. We reported about $2 billion worth of option activity going into Tesla stock yesterday, and that has not slowed down here today as well. There's a lot of short-term bullish trades that are being placed on Tesla stock today. Take a look at some of these individual trades that were placed about 2 hours ago. This one is an October 20th $85 call worth $4.35 million. Another one for September 20th 2024, a $90 call worth $4.39 million. A lot of your couple $100,000 trades, those are significant, but I really like to look at those $1 million plus trades because those are big time investors making those trades. And lo and behold, you have an October 13th 230 call worth $2.78 million. A lot of these $300 calls as well coming in today. And then a couple more trades worth over $1 million a piece heading into Tesla options today. Look at some of these 260 calls worth $100,000 a piece. They're buying these that expire tomorrow for $3 a piece. Maybe these could be swing trades, but I mean, Tesla far out the money options that expire within a day don't tend to move around all too much. So that makes me question whether or not these are actually day trades, maybe I shall say, not swing trades, but day trades, or maybe someone does anticipate a Cybertruck announcement coming today. Now, I don't know where these original rumors did start. I heard about this October 6th date over a week ago, so this is not something that is just coming to light right now. We've heard speculation on this. I don't know for sure if this is coming today in after hours or tomorrow morning or tomorrow in after hours, but it would make sense. If you get the Cybertruck delivery event announcement tomorrow, you get the event later on in October, maybe the beginning of November, a couple weeks after that, maybe by the end of November, beginning of December, you get the first Cybertruck deliveries. That would make sense to me. That timeline does make some sense. If you start to stretch it out, then you might not get the first Cybertruck deliveries in 2023, and that's really what Tesla and Elon are striving for. So let me know what you guys think down below in the comment section. But if you're looking at the option activity, a lot of people are turning very bullish on Tesla stock. Let's go ahead and get into all of the Tesla stock news that you need to know on the day today. Then we're going to get into the Fed U-turning on some of their bearish, hawkish comments lately. They're trying to control the long end of the curve by some of their statements today, and it's not really working. This could be a big problem, or at least a sign of a big problem for markets. South Korea reported 4,501 Tesla sales for the month of September, 93% of which being the Model Y. Year to date, negative 31% over the same period last year, but year to date is 62% of last year's total. So it does look like the shutdowns that we've seen, specifically in Shanghai, I would argue, since, I mean, China is pretty close to South Korea, probably had this effect on this month, right? For the month of September, probably had that negative 31% effect, but this is really good news. You're up 62% on a year-over-year basis for the month of September. That's big. For Japan, numbers are estimated at 0.6 thousand Tesla sales and 1.8% market share for September. Year to date, 13% over the same period last year, and year to date is 66% of last year's total. I find this interesting considering Toyota is so popular in Japan that Tesla is actually gaining some market share here. In Germany, as well, has reported 4,216 Tesla sales and 1.9% market share for September, the second best third quarter, and 4% quarter over quarter. Year to date, up 34% over the same period last year, and year to date is 73% of last year's total. So Tesla continues to grow like wildfire in Germany. This really has Volkswagen on their heels. As Sawyer Merritt says, here are a few amazing charts from Bloomberg. Tesla's prices now compete with the average new car. And that's, I mean, the Model 3 is below your average new car out there. This one says top 5 trucks that Tesla owners are considering. It says 37% of individuals in the truck market are looking for the Tesla Cybertruck, and then Rivian's the next highest, and that's at 2.1%. So Tesla is really not having any competition from foreign truck models, let's call it, with current Tesla owners. The brand loyalty is very strong with Tesla. And then Bloomberg says, where's the competition? Tesla still rules the US market for fully electric cars, with its market share sitting at 61%, down slightly from what you've seen during 2020 and 2021 at about 63.5% market share. Hyundai and Tesla are now in a new partnership for the North American charging standard ports starting in Q4 2024. The all-new and refreshed Honda EVs will gain access to more than 12,000 Tesla superchargers across North America. Tesla's Giga Berlin does not stand out in terms of the number of accidents the government states. This is something that was kind of rumored for Tesla, that Tesla seems to have more accidents than other manufacturing facilities in Germany, and it's been damaging, quote, to Tesla's reputation. But it does say, as per the German government, that Tesla's numbers are in line with what you would see at any factory in Germany. So I wouldn't say this is huge news for Tesla stock investors, but it definitely can't be bad. And for your daily dose of the Cybertruck, we have a all-new detailed Cybertruck, and it is just shining. I mean, that beast looks so good, and you have seen a lot more Cybertrucks recently, and a lot more Cybertrucks actually going home with Tesla employees, which is very different than what we were seeing months ago or a year ago. You really weren't seeing too many Cybertrucks a year ago out in public roads, so it does seem feasible that we could get a delivery event announcement here coming pretty soon. Audi has sold 7,538 BEVs in Q3 in the US, up 93% year over year, with the most popular model being the Q8 e-tron, which sold 2,748 vehicles. Volkswagen has sold 10,707 BEVs in Q3 in the US, up 61% year over year. Basically, all of these are the ID4, and literally that's all actually. 10,707 of them were sold in the US. And BMW sold 13,079 BEVs in Q3 in the US, up 202% year over year. The models being the i4 and the i7 accounting for 7,538 deliveries, and the BMW iX accounting for 5,541 deliveries. Keep in mind, Tesla sold roughly 200 to 270,000 EVs last quarter alone in the US, so these numbers even combined are like a tenth of the vehicles that Tesla sold for Q3. So these numbers might look impressive. BMW definitely doing the best, up 202% year over year, but they are a drop in the bucket compared to Tesla's numbers. GM actually got some really bad news today that sent GM stock down about 4%. It looks like, quote, GM has at least 20 million vehicles with potentially dangerous airbag parts. Regulators held a meeting on its determination that 52 million airbag inflators made by ARC should be recalled. So it looks like a massive actual physical recall is likely coming for GM. This could cost GM up to $1 billion to replace all of these airbags. So I guess it's true what they say. When it rains, it really does pour. Swedish EV maker Polestar's deliveries rise 50% in Q3. However, they reported a quarterly decline of 12% in deliveries to 13,900 units compared with the second quarter, as high borrowing costs dent global demand for new vehicles. This is the same as Tesla, but Tesla's deliveries were only down 7% from Q2 numbers, which was Tesla's all-time high, and a lot of this you can contribute to the shutdowns that you've seen at Shanghai and at Texas, but really, I mean, these numbers are still solid from Tesla, as we've went over many times now. But Polestar does not have the same excuse as Tesla. And look at that, like clockwork, the Model 3, Model Y inventories are rising again here in the US. This is not exactly what you want to see. I guess if you're a bear, this is one of the things the bears always like to point out, that Tesla's inventory is high, and it's much lower than any other automaker, but it's true, inventory has been rising. Last quarter, Tesla did run down their inventory by about 5,000. That should help out earnings a little bit. But what this really shows me is production is really starting up again for the Model Y and for the Model 3. Hopefully we get an announcement on the Highland coming to the US as well. I'm just waiting to get my hands on that thing. If we do look at the inventory numbers as far as the entire globe for all Tesla models, you can also see a jump here in basically everything, especially the Model S and the Model X. You are not seeing a jump at all in inventories here in the US for both of these higher end models, but you did recently see a jump if you incorporate the entire globes inventory. So I find that a little bit interesting, but a similar chart here, especially for the Model 3 and the Model Y. And look at this beautiful chart of the Google Trends data for the Model 3 and the Model Y, especially. They are continuing to trend to the upside. Recently, the Model Y hit a low of 42 for the Google search trends. Now it's at 52, and the Model 3 hit a low of 56, and now it's at 63. So while the Model S and X have remained pretty stagnant, still higher than where they were before as far as search trend data, the Model 3 and the Model Y are picking up again. And as you know, Q4 is always Tesla's strongest quarter, so this is a really good sign to see as we did just start Q4. Wow, and look at that. Tesla is now running about 200 ads on Google. Last we knew, Tesla was running about 86 ads, so there is a lot more ads being run. Let's look at some of these ads together. One of them is highlighting the $7,500 federal tax credit starting at $32,740. They are advertising the Model 3. Another advertisement for the Model 3 as well. This says schedule a demo drive, and starting at $32,740. Again, pointing out the Model 3 advertisement on the Model 3 says it starts at $29,240. Autopilot comes standard. I think that is a great area to advertise. Personally, when I bought my Tesla a while back, I didn't even know that autopilot came standard. Like, I didn't even know that. That was a pleasant surprise. That would have been cool to know. I probably would have bought a Tesla a long time ago. Discover Tesla affordability. No annual maintenance required, best-selling SUV in the US. These are great points for Tesla to be advertising on. It would be cool to see Tesla kind of pick out some of the monthly payment amounts as well to advertise. Maybe you can lease it for like $380 a month. That's a pretty good way to kind of lure people in. If you're Tesla, if you're watching this, maybe you should try some of that as well. But a lot more advertisements being run. I really want to see some ads on TV though. I think a lot of people are sold on Teslas, at least where they're advertising right now, on Twitter, on Google. I think you really want to hit those individuals that are watching cable television. They're the ones that don't know anything about Teslas. But this is still a really good sign. Let's not take that away from Tesla. They are taking the initiative. They have 200 ads on Google. This is a really good thing to see. If we take a look here on the charts, Tesla stock is slightly now in the green, which is quite the reversal. Tesla stock was down about 1.5 at one point today. The charts look beautiful. Before we look at that, I think it's important to know that we get our non-farm payroll report coming out tomorrow, as well as the unemployment rate, and that's likely to dictate the move in Tesla stock if we don't get a delivery event announcement coming tomorrow. All things considered, that data tomorrow is going to be massively important. Now, if you look at bonds, TLT is actually down today. So as you are seeing to some degree a rebound in the markets, yields are actually going higher on the 20 and the 30 year. TLT tracks the 20-year bond, so that's not great. And I elaborate on this a little bit more in the video coming out tonight at 9 p.m. Highly recommend you guys stay tuned for that one. There's some really crazy things that are being talked about over there on CNBC and Nick Timmerhouse. You guys just got to see it. But essentially your 20-year, 30-year bonds, that affects the real economy. Those are the bonds that really dictate lending, right? If you go get a mortgage, they're not giving you a rate on your mortgage based on the 2-year treasury. They're giving you a rate based on your mortgage on the 20 or the 30-year treasury. Those are things that really affect your company level borrowing as well as your consumer level borrowing. So TLT is important to watch, and a lot of people are starting to say that the Fed has no control anymore over the long end of the curve. The Fed, when they raise rates, they affect the 3-year, the 1 month, or the 1 month, the 3 month, the 6 month, the 1 year, the 2-year yield curve. Beyond that, it's really up to the markets to decide where yields go. So for the 10-year, 20-year, 30-year, they can get disanchored from Fed kind of verbiage, right? Or Fed policy. The markets might just start saying, hey, we're not even going to listen to the Fed anymore. The government's in a really bad place right now. They're a lot riskier than they were maybe 15 years ago. The Fed's no longer buying bonds. Yield should be 6%, 7%, 8%. That's a dangerous environment to be in, and that's what is really going to make the economic data tomorrow that much more important. Now, good news is regional bank ETF, the KRE, is up 1.37%. That is fantastic news. Oil is down 2%. That is fantastic news. The dollar is down 0.25% today. That is also fantastic news. And if you take a look at some of the banks, Bank of America, Citi, they're basically flat on the day, which is pretty good news considering they're trading near their SVB lows, their banking crisis lows. You don't want to see these banks continue to trade downwards. That's just showing you that there is a real credit risk out there, and I think that's the problem. Bonds are not really saying there's a recession risk right now. They're more so saying there's a credit risk. Like we could see another financial institution go bankrupt. That's the credit risk that bonds are literally screaming right now. But if you look at Tesla on a technical basis, like we said at the beginning of this video, Tesla is in a small minority of stocks here on the markets that are above their 50-day moving average, and then 4% above their 50-day moving average. That's like 1% of all stocks out there. It's a very low amount. It might be less than 1% now. So Tesla is really outperforming. Again, 265 is a big level to be watching. Tesla stock right now is 261. So a couple dollars higher, you're testing major resistance. You're also testing a long-term downtrending line. If we do get some kind of positive catalyst that could send Tesla stock higher and you break above that 265, you're going to break above this long-term downtrending line as well. And that's really a big level for the algorithms that could send Tesla stock well into the $300 range. You guys got to remember, Tesla stock is very much under-owned on Wall Street. It's got a lower buy percentage than your average S&P 500 stock. The average buy rating on Tesla is like 44%. The average on the S&P is 55%. So for a lot of reasons, Tesla's under-owned. Tesla looks like a very solid investment for next year. Let's be honest, the estimates are far too low. And if the economy is not growing, Tesla, if they are going to grow at 30+% next year, looks very attractive, and the valuation looks pretty undervalued relative to other big tech names out there on the markets right now. But if we do get any downside, maybe the economic data tomorrow is stronger than what the markets like to see, well, you're basically just a given going to fall back down to your 50-day moving average at $250. Your 100-day moving average is sitting here at $245. I think that would be the extent of any near-term damage. If you did fall under that, 240 is your next major level. Your level connecting the lows from, the low even back here in January, this line right here, that's going to put you right there at about 242, so that would be a big level to be watching as well. If you get an all-out disaster in the markets, if the Fed has lost control of the longer end of the curve and rates are heading towards 5%, break above 5%, they're heading to 550 or higher, well, then your next level would be that 200-day moving average. That is at $207.79 per share. The RSI at 55.13 looks very healthy. I would say neither bullish or bearish. You're really neutral here. And the MACD just actually crossed over again. The yellow line is now above the blue line. That is showing a lot of really short-term positive momentum with Tesla stock. Last but not least, if you are not following us over on X, Twitter is just the first thing that comes to mind, X, then go ahead and give us a follow. It's Michael Tyler over there. I did share some breaking news, multiple headlines that came out from Fed officials today. I found this, again, interesting because they're really trying to walk back a lot of their hawkish comments that have really de-anchored the long end of the curve. Now, like I said earlier, the Fed raising rates directly affects the short end of the curve. What markets interpret as Fed policy dictates the short end of the curve. Now, when the Fed says higher for longer, that we might not even cut rates next year, like Fed Collins says, that starts to affect your long end of the curve, your 10, 20, 30-year bonds, and that's where you get into a problem of potentially restricting the economy too much, especially if those yields start to run away higher from here. Then you're almost certainly looking at a very hard landing. So to try to calm these rising long end yields down, your 10, 20, 30-year yields down, the Fed, all they can basically do is talk to the markets and be a little bit more dovish. So Fed Daly says here, market odds for hikes in November and December don't look out of line. And I pointed out that the odds of a rate hike by December is 68.7%. I did also point out no more hikes looks to be communicated by the Fed. So the Fed's making it very clear here today that they do not plan to raise rates again. Now, the odds of a rate hike coming at the next Fed meeting are like almost nothing. If we can go ahead and pull this up. Looks like that's a little bit laggy on us. There's a 23.4% chance of a rate hike in November. Altogether, 68.3% chance that we don't get another hike through December. Fed Daly also says we're going to start seeing more dispersion in the FOMC dot plot. I pointed out she is really trying to talk down the bonds now. This should be alarming for all investors. Something could be breaking. Now, what this dispersion in the dot plot really means is you're going to start seeing some Fed officials that lower their estimates, and this could mean maybe more rate cuts for 2024. Maybe another rate cut or two for 2024. Maybe a couple more for 2025. That's basically what she was trying to say to the long end of the curve today. She says, we are not in a wage price spiral. I said, didn't we already know this? Again, trying to talk down the long end of the curve. This is one of the things that I found very interesting. Fed Daly says, we could easily overcorrect. We need to take the time to do it right. And then right here as well, this is probably the biggest comment period from the Fed today. Fed Daly says, we shouldn't assume we're now in a higher rate environment. This is directly talking down the long end of the curve. She's saying, hey, we shouldn't assume we're never going back to 2% interest rates again, or 3%. You should not assume that, market, because that's basically what the 30-year has assumed as it's sitting close to 5%. The 30-year is like, yeah, we're never going back down again. We're going to stay high, and we're going to stay high forever. That's what the 30-year is basically saying. She tried to directly walk that back. Now, the question is, why? Is something actively breaking in financial markets? Now, at the video at 9 p.m., we're running a little bit short of time here in this video. This video is getting a little bit long. The head of asset management at JP Morgan for fixed income, which is basically a fancy way of saying bonds, your head of bonds, said today that you are at the level in which something could break at any time. Nick Timmerhouse said something similar. Another individual said something a little bit similar. He says the risk premium now that the long end of the curve is this high means the S&P should be about 23% lower. And if you look at the 50-year historical average, the S&P could fall over 40%. They're all starting to sound a lot similar. And really, something could break at any time. And that is not great. So that is all we have for you guys here in this video, a jam-packed video if I were to say so myself. Let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel if you made it to the end of this video, and if you guys want to come trade with us live in real time, link down below in the description of this video as well. Thank you for watching, enjoy the rest of your day, and I will see you in the next one.